In 2021, when Bitcoin was flying towards $69,000 and everyone was celebrating, Cathie Wood said something that most people ignored. She said, "Corrections are good. They keep us all humble. The strongest bull markets I've been in are built on walls of worry." Nobody wanted to hear that then. The price was going up. The vibes were good. Everybody was buying NFTs. Why would anyone listen to someone talking about corrections and worry? Then Bitcoin crashed 78%, from $69,100 to $15,600. Wall of worry built. Fast forward to today, March 2026. Bitcoin peaked at $126,000 in October 2025. Then it crashed again, down to $63,000 by February, a 50% drop in 4 months. And at the time of recording this video, Bitcoin is sitting at around $69,370, the exact same price as the 2021 all-time high. The price that took 2 years and an FTX collapse to finally recover from last cycle. And the wall of worry is back, bigger than ever. Which means Cathie Wood's words are back too, more relevant than they have been in years. That's what this video is about. We are going to walk through exactly what is happening to Bitcoin right now, what the current price action is telling us, what serious analysts are saying, and most importantly, what Cathie Wood's 3 most important Bitcoin statements actually mean for where this goes from here. Stay with us, because by the end of this, you are going to see this moment very differently. For anyone who doesn't know her, quick context. Cathie Wood is the founder and CEO of ARK Invest. She is not a crypto influencer. She is not someone posting charts on Twitter trying to get followers. She manages billions of dollars in institutional capital. She called Bitcoin as a serious asset class years before Wall Street would touch it. She sat in front of cameras on CNBC and said Bitcoin would reach $500,000 when the price was sitting at $10,000 and anchors were barely keeping straight faces. She has been wrong on timing before. She'll tell you that herself. But her directional calls on Bitcoin have been correct when nearly everyone else in traditional finance was dismissing it as a tulip bubble or a Ponzi scheme. She has made some specific statements about Bitcoin that map almost perfectly onto what is happening in this market right now, and we are going to break each one down. Lots of hope for 2026, but if we are right, growth will be much stronger. And most importantly, inflation will be much lower than it has been with tariffs, Cathie Wood said. This is the right place to begin because it reflects the emotional reality of this moment. Bitcoin moved from roughly $25,000 before April 2024 halving, all the way to $126,000 by October 2025. That is a 5x expansion. It marked the first time Bitcoin held above 6 figures. New all-time highs continued printing. The ETFs were absorbing billions in inflows. MicroStrategy kept stacking. Institutions kept increasing exposure. Everything felt like it was aligning perfectly. Then, the price started dropping. And it kept going. By February 2026, Bitcoin had given back nearly half its value from the peak. Buyers who entered around $100,000 were now facing heavy losses. Social media sentiment flipped from excitement to fear. The same voices projecting $200,000 were now publishing charts pointing toward $30,000 or even lower. That emotional shift is exactly what Cathie Wood is highlighting. Markets do not move in straight lines, and they are rarely driven purely by logic. They move through cycles of belief and doubt. When prices fall enough, even strong conviction begins to weaken. Investors start questioning their assumptions. Headlines feel heavier. Every macro signal starts to look like a potential risk. New participants hesitate, unsure if they are stepping in too early. This is where her statement becomes important. The markets that ultimately deliver the strongest growth are not the ones that feel easy throughout the entire move. When everything feels certain, positioning becomes crowded. And when positioning becomes crowded, even small shifts in sentiment can trigger sharp reversals. Confidence disappears quickly because it was never deeply rooted. Stronger trends develop differently. They build while uncertainty is still present. While many participants remain skeptical, others are quietly positioning. Price begins to recover even as trust has not fully returned. The majority hesitates, waiting for confirmation that often comes much later. That is the dynamic playing out now. In March 2026, Bitcoin is sitting near $69,000, a level that previously acted as a ceiling for years. a level that carries significant historical weight. The next move from here, whether upward or downward, will reveal how much strength remains in this cycle. This is the uncertainty. Right here. Right now. Before we get to Cathie Wood's second statement, let's anchor this in what's actually happening on the charts. Ted, one of the cleaner technical analysts in this space, posted his read on this exact price zone recently. He laid it out plainly. Bitcoin got rejected from the $76,000 level. Now, Bitcoin is back to the $69,000 to $70,000 support zone. If this level holds, Bitcoin could see another bounce back, and if Bitcoin fails to hold it, there'll be a very high chance that the local top is in. That's a clean, honest, two-scenario analysis. No hype. No doom. Just the levels. Bitcoin bounced from $63,000 to $76,000. That's a meaningful recovery. Then it got rejected at $76,000 and has now dropped back to the $69,000 to $70,000 zone. This zone is not arbitrary. It was the 2021 all-time high. It was resisted for years before becoming supported. It is a major psychological and technical line. If this zone holds, Bitcoin's structure stays intact. Bulls can argue the cycle has more to give. If this zone breaks, the picture gets much darker very quickly. And right now, Bitcoin is sitting right on top of that line. That's the technical reality. Uncomfortable. Unresolved. Right on the edge. But Ted's read is specifically short to medium term. It tells you where to watch, but not necessarily the full story of what this cycle means. For that, you need Cathie Wood's second statement, where she said, Bitcoin truly is a money revolution. It's a very important insurance policy for countries that don't have the dollar as a reserve currency as we do. This is where most people stop thinking about Bitcoin correctly. The way most retail investors think about Bitcoin is as a trade. A speculation. You buy it low, you hope it goes up, you sell it for profit. That's it. And that framework causes people to panic sell during corrections, because in a speculative trade, a 50% drawdown is a disaster. But Cathie Wood is describing something completely different. She's describing Bitcoin as an insurance policy. And the customers for that insurance policy are not retail traders in the US. They are entire nations. Think about what the world looks like right now. The dollar is still the world's reserve currency, but that status is under more pressure than it has been in decades. US tariff policy has disrupted global trade. Countries that used to happily park reserves in US Treasury bonds are starting to ask questions about whether they want to remain that dependent on American fiscal and political decisions. De-dollarization is not a fringe theory anymore. It is an active policy conversation in multiple countries across Asia, the Middle East, Latin America, and Africa. Those countries need an alternative. Gold has always been the answer. And gold had a massive 2025, gaining more than 60% in market cap, driven precisely by these fears. Central banks around the world were buying gold because they were looking for something that wasn't the dollar. Now here's the connection that matters. Crypto Fergani, another crypto influencer, made this argument directly in a post this week. Gold has ended its bull cycle. Liquidity is rotating into Bitcoin right now. When they press go, this won't be a bull run. It will be a financial reset. The rich know it. The smart are quietly preparing. Everyone else is asleep. Strip away the dramatic framing and there is a real argument underneath it. If gold's big run is maturing and flattening, where does the money that was parked in gold, looking for an inflation hedge and a dollar alternative, go next? Bitcoin is the logical destination, not for everyone, not overnight, but directionally. ARK Invest's own 2026 research highlighted exactly this. They revised their Bitcoin price model upward specifically because gold's market cap expansion showed the world had more appetite for non-dollar reserve assets than previously modeled. If even a portion of gold's $20 trillion plus market cap rotates toward Bitcoin over the next decade, the impact on Bitcoin's price is enormous. This is what Cathie Wood means when she says Bitcoin is an insurance policy for countries without dollar privilege. It is not a retail phenomenon. It is a geopolitical phenomenon. And geopolitical demand is patient, structural, and does not care about a single week's price action. The question of whether $69,000 holds this week matters for traders focused on short-term direction. The question of whether sovereign wealth funds and national treasuries begin treating Bitcoin as a reserve asset over the next 3 to 5 years matters for everyone. And the answer to the second question is not determined by the first. That is the idea that sounds unusual at first. It is also the one gaining the most support right now. Growth, inflation, and capital allocation. The core drivers of global markets. Stronger expansion and lower inflation reshape how large pools of capital position, the kind of shift Cathie Wood is pointing toward. Bitcoin being viewed through that lens, the asset that fell 84% in 2018, the one that dropped 78% from its 2021 peak, here is what Cathie Wood is actually pointing at. Each cycle, Bitcoin's drawdown from the peak has been smaller. First cycle down 84%, then down 78%. This cycle, from $126,000, Bitcoin dropped to $63,000. That's a 50% drawdown. Still brutal, still painful, but meaningfully less catastrophic than what came before. Why is the drawdown shrinking? Because the buyer base is changing. When BlackRock runs a Bitcoin ETF and it dips, there are systematic rebalancers buying. Portfolio managers with mandates to maintain a percentage allocation in Bitcoin are buyers when the price drops. They don't have emotions about it. They don't post panic tweets. They follow their allocation model and they buy. That structural bid, the institutional floor, is what's compressing the drawdowns cycle by cycle. ARK Invest's own data shows Bitcoin's Sharpe ratio, meaning the return you get relative to the risk you take, has been improving. It is now better than most other crypto assets and competitive with many traditional asset classes on a long-term basis. That is not the profile of a pure speculative casino chip. That is the early fingerprints of an asset growing up. It will not happen in one cycle. But Cathie Wood is saying the direction is clear. Bitcoin is becoming, slowly and painfully and imperfectly, a legitimate reserve asset. Something that behaves less like a lottery ticket and more like a long-duration store of value. And here is the critical implication of that. If that is true, then the people calling for Bitcoin to crash 75% to 80% from the top to $25,000 or $30,000 might be applying last cycle's logic to a structurally different asset. None of this means the bear case is impossible. It is not. And you deserve to hear it straight. Cathie, a well-followed on-chain analyst, posted something this week that got a lot of attention for the right reasons. He laid it out bluntly. Bitcoin is showing the same pattern we saw during the 2022 bear market. If the 4-year cycle still holds, Bitcoin will dump to $40,000 in 2 weeks. Most people aren't ready for a real bear market. He posted a side-by-side chart comparing Bitcoin's 2022 price structure with what's playing out in 2026. The similarity is not subtle. In 2022, Bitcoin came off its $69,000 all-time high, bounced sharply to give people hope, got labeled a bull trap, and then collapsed to $15,600. Cathie is saying what we're seeing right now, the bounce from $63,000 to $76,000, and the current rejection back towards $69,000, looks like the exact same bull trap forming in 2026. His target, if that plays out? $40,000. Here is the logic. The 4-year cycle has repeated 3 times with brutal consistency. After every all-time high, Bitcoin has come down hard. Previous halving cycles have produced major bear markets lasting 12 to 18 months before the next recovery. If the cycle is still intact, the $126,000 top in October 2025 was the peak of this cycle, and we are now in the early stages of the bear market, not a dip within a bull market. Cathie is not alone in this view. There are serious analysts drawing the same comparison, looking at the same chart structure and arriving at the same conclusion. So how do you know if he's right? One number. $63,000. That is the February 2026 low, the line where the selling stopped last time and buyers came back. If Bitcoin breaks below $63,000 on a weekly close and keeps going, Cathie's $40,000 scenario becomes very hard to dismiss. The technical structure would be broken, the bull trap would be confirmed, and the bear market would be underway. If $63,000 holds, his scenario loses significant ground. The pattern he's drawing would be invalidated, and the people calling this a mid-cycle correction, not a bear market, would have a much stronger case. That is the honest answer, not a prediction, Just the level that separates two very different outcomes. Watch it, putting it all together. Here is where we actually stand. Bitcoin is at $69,370, sitting on one of the most important support zones of the entire cycle. The exact price where the 2021 bull market topped out and where the base of this cycle now needs to hold. Ted says this zone is critical. Hold it and another leg up is possible. Lose it and the local top is likely confirmed. That's the short-term picture. Chiefy says the 2022 pattern is repeating move for move and most people are not ready for what comes next if the 4-year cycle asserts itself. That's the bear case, and it has a real chart to back it up. Crypto Fergani says the bigger picture is a rotation from gold into Bitcoin, a structural shift in where global liquidity is flowing. That's the medium-term thesis. And Cathie Wood is operating on an entirely different timescale. She is saying corrections are normal and healthy. She is saying Bitcoin is becoming an insurance policy for a world with serious questions about dollar dependence. She is saying Bitcoin is maturing into a more stable, fixed income-like asset with every cycle that passes. Here is what makes this moment genuinely difficult. Every single one of those views can be argued with data. Nobody is just making things up. The bear chart is real. The bull thesis is real. The institutional floor is real. The macro risk is real. What separates them is the time horizon and which evidence you weigh more heavily. If you weigh the 4-year cycle and the 2022 chart comparison most heavily, Chiefy's case is strong, and $63,000 breaking would confirm it. If you weigh the changing buyer structure, the shrinking drawdowns, the gold rotation thesis, and the sovereign demand argument most heavily, Cathie Wood's case is strong, and $69,000 holding would confirm it. Both are live possibilities right now. The strongest bull markets are built on walls of worry. That wall is being built right now. Brick by brick. Each capitulation, each panic sell, each $40,000 prediction adds another brick. Cathie Wood has seen this before, multiple times, in multiple markets, and she's saying the same thing she always says during these moments. Stay humble, pay attention, because the moments that feel the most uncertain are usually the ones that, looking back, were the most obvious entry points of the entire cycle. Watch $69,000 this week. Watch $63,000 as the line that separates two very different outcomes. And remember what was said long before this correction began. Corrections are good. They keep us all humble. The strongest bull markets I've been in are built on walls of worry. Drop your thoughts below. Are you treating this as the wall or the warning sign? Thanks for watching and don't forget to like and subscribe. See you in the next one.